Hello, everyone, and welcome to this week's podcast. We are currently sitting here on June the 13th, but this will be coming out on June the 14th. This is take two for us. I had a bit of a hiccup there on dates a moment ago, but nonetheless, we've had a quite an action-packed week here. Looking just at performance so far,
Wait. How you doing, David? It's nice to see you. You don't come up too often, right? Let's talk about that. How you doing? How's your week?
It's been good. It's been a long week here. I've been here all week, but had some family stuff this past weekend, so I've been in RVA for quite some time compared to most trips that I make down here that feel like they're kind of quick. But
yeah. Well, nice to see you. Nice to see you. It's always nice when you're able to get in. The office is a lot more lively when we can get people in there like yourself and talk pretty loud. So
well, and at this point, this week was like a big week for the office, just because we've gotten 10 plus people in most days, or it seems like we're close to that. So, typically when it's fairly thin in the office, this week's been a bit of a change from that. So
certainly
quite a people. Yeah.
All right, take us away now. You're itching to tell us about how we've done.
Well, it's just been a positive week this week, and we feel like we've got a lot to talk about. We have a lot to talk about here. Just looking at since Friday, have seen most indices in positive territory with Nasdaq Composite, Nasdaq 100, and the S&P with yesterday's action moving to new all-time highs on their charts. Some of the other things, though, that's kind of interesting, you were talking about a one-week roll just sort of with stocks. Everything since Friday has been positive, but the one-week roll might tell.
See, I was just about to jump in there because it's been a positive week for the cap-weighted guys, right? Some of the larger names, they continue. I sound like a broken record. We sound like a broken record at this point, just been saying the cap-weighted core is still the place to be. But you look at some of the last week, one-week roll, the calendar week, that is, you'd see some maybe underperformance from the average stock. The equal weighted index is down about 17 basis points. Russell 2000, so small caps, still not participating. They're down about a third of a percentage point. So I think the headline is strong, right? The core of the market is still strong, but you aren't seeing that participation. We'll touch on some of our participation indicators a little bit later because we have seen some notable maybe reversals that are worth mentioning. But I think from a performance perspective, you're still seeing that same paradigm.
Well, to your point, that core of the market, earlier this week, one of the analysts on our team looked at that S&P 500 group funds on the asset class group scores page because it's above 5 for the first time. Right. And we've seen a lot of strength out of that particular core market group, but even saying that it's above 5 for the first time is significant.
Yeah, and just to catch you up, just in case you all at the listening aren't acquainted with the scoring system, every fund, ETF or mutual fund on the platform, the NDW platform, is designated a score from 0 to 6. 6 being the best, 0 being the worst. So the average S&P 500 index fund, is scoring above 5.0, which is historically extremely rare. Actually, it's the first time, as David mentioned it. So yeah, it is rare. But point being, we are seeing that strength really shine through our scoring system. And it does beg the question, I know momentum is going to say it can keep going, right? But it does kind of start to beg the question of how much longer this could possibly go for. I don't know.
Which sort of segues into our indicator conversation. Because, even this past week, the bullish percent for the NYSE, which for those not familiar with the indicator, it measures the percentage of stocks on point and figure buy signals. So any of those bullish percents going to be looking at that particular measure. In this case, we're evaluating the NYSE stock universe, so north of, I believe, 1,800 stocks that it's looking at. And that particular indicator, BP NYSE, reversed down following, I believe, Monday's action and sits right at 52% right now, which kind of is in line with some of the index bullish percents that we've seen reverse down in prior weeks, kind of sitting around that 50% mark. In general, we've seen those charts start to make lower tops too. Right. So overall, even when we thought early in the beginning of the year, it was just the Magnificent Seven and participation was low. Compared to now, participation's even lower. Yeah. And that's sort of the thing that we're still seeing the market move to all-time highs, but doing that with the caveat that technically we're still seeing participation wane. Not as many stocks are seeing that upside movement. So you're not really seeing as many names as even earlier this year.
Yeah, and there's two ways that you can look at it. I kind of call it a big game of chicken, right? And the one way that you can look at it, which is a bit more bearish, is we're kind of on thin ice, right? I mean, if you start to see those guys that are moving higher, if they start to show some weakness, there's really not a lot of support there. So maybe that's a little bit more of a bearish takeaway. But on the other side of it, you could say, well, the market is reaching new all-time highs, and like half the stocks aren't even on buy signals, right? So like if there is a lot of room for improvement, there is a lot of room for more participation. As I mentioned, the average stock within the S&P 500, the equal weighted index, that really is continuing to underperform small caps specifically. We have been begging and pounding the table for more small cap participation, and we haven't gotten it. So those are the two kind of ways that I would look at it. If you tend to lean more bearish, you're probably thinking that this is a little bit scary. If you're maybe a little bit more bullish or the glass is half full, you would probably look at it and say, well, there's a lot of room, right, for more participation. Yeah.
The thing sort of in looking at those is, I mean, you can still have as we've seen, and really has been the theme for what has felt like 9 months now, you can still have a small basket of stocks carry the market high.
Right.
So, I mean, we can still see participation way and indices can continue to charge higher. I mean, that's not the greatest scenario, I think, for just investors in general, not to mention for many people running various strategies. But I mean, at this point, the silver lining still exists in the fact that you could say roughly half of most of these stock universes trade on point and figure buy signals. So as long as you're seeing your stocks maintain buy signals, not violating key levels of support, and even if they switch recently to, sell a signal, show a sell signal or two, as long as they're not taking out key support levels, you're probably still looking to hold on those. So I wouldn't say the indicators have really given you this massive call to action just yet, but it's still signaling to us that we need to keep getting pretty close leash on this.
Yeah, let's talk about some indicators that have shown a call to action. That being, some of the emerging weakness from international equities, really through Latin America specifically. Internationally, there's been a lot of dust that has kind of settled over the last couple of weeks with various elections
across the board,
India, in Europe specifically, in Mexico, with, again, that kind of Latin America tone. So there's been a very busy political couple weeks internationally, and you're seeing, some shakeup across the board. And what that's led to is changes in price. Of course, we're not NDW. David and I certainly don't have an opinion, at least in our analysis, on the political stance of the world, but markets do, right? And they have opinions on what's going up and what's going down based on, what's going on. All of that to say that price has changed enough that we've seen some significant deteriorations internationally.
Well, and like you said, it's primarily just been within that Latin America space. I mean, like you mentioned, India sort of saw a pullback there, but now it's kind of rebounded. It's still looking okay. But and like I know this past week, I think France had elections, so there's a lot going on in Europe. Yeah. But even then, looking under the hood of international equity, the primary culprit from our perspective has been Latin America, where a lot of that now transpired into relative weakness. We saw some absolute weakness a couple of weeks ago or last week, I believe. Now it's transpired into relative weakness as well. Because the big move today was seeing international equities fall to number 3 and Dolly being overtaken by commodities. Right. Now, granted, that's only one signal right now. Commodities are sitting at 256, international at 255. So, I mean, some who may be running some Dolly strategies may be looking for that signal count to separate. Still a little bit there for 5 signals before making a potential change. So keep an eye on that. Right now, it's still just sitting at 1. And we even said this earlier, it's not necessarily a story of commodity strength. Right. This is going to sound like a broken record, but it's just been international's weakness. And it's been in that Latin America space is where we've seen the bulk of the signals fall. Because looking under the hood of Dolly to sort of the international view right now, I mean, in the past roughly week and a half, or call it 2 weeks, we've seen Latin America drop about 20 signals or a little more than 20 signals within that international equity sleeve, which, I mean, any asset class or group doing that in a 2-week span, that's significant.
Right.
As far as technical or relative deterioration, the way we're talking about it here. And I mean, it wasn't like there was, it wasn't like it was just domestic and commodities that took signals away from international with this Latin American weakness.
Right.
I mean, it was
it was broad-based.
It was broad-based.
Some
It was
currencies,
elsewhere.
some fixed income, some representatives grabbing, and those guys are still towards the bottom. I do want to go back to a point that you mentioned. I don't want to kind of just gloss over it. It wasn't necessarily commodity strength, right?
Right.
Commodities does now sit in second, but again, those signals are pretty close. I have been waiting for a group within commodities to really just lead the way. Energy-focused commodities, those guys have kind of gone up and down the gambit in terms of their relative strength. They're now sitting in last place within the intra-commodity rankings. I don't think it was too long ago that they were either first or second. So
a couple of months ago, but yeah, I mean, it wasn't that long ago.
Okay.
But even then, no. I mean,
Yeah.
it's been, your point being is that sort of just felt like this abrupt changing of the guard with the commodities.
Silver, gold, copper, right? I mean, these are all different, various, different parts of commodities that have seen agriculture. Let's think about cocoa, for instance, right? I mean, you're running up with these, massive stems that are very quick. And really none of those groups quite yet have been able to sustain their relative strength, relative strength against the rest of the group. So I think that's important just to keep an eye on. Really, we've seen a lot of these run-ups. They're great to see for sure if you do currently have them already. But in terms of holding something or leadership within commodities in the long run, let's try to find some prolonged leadership.
Yeah, I mean, because, coming off of 2022, energy was such a primary focus, and it sort of has seemed like through varying points that, I know at least for me, I still get calls every once in a while. People want to take the crude, look at the crude chart. Is it getting ready to make a rally or anything like that? I mean, at this point, crude just generally has been in a negative trend since April. We've seen a little bit of test of that trend line this week. That bearish resistance line there as it rallied up to 78. Even saw some positive action yesterday, but still technically haven't moved into a positive trend or returned to a buy signal. So, I mean, it's not quite gotten us to believe it just yet.
Yeah, it looks like those low 70s. We can put the chart on the page right now.
Super significant level.
Low 70s are just a spot where bulls really don't want to let it go below. Whoever those bulls are, wink, wink. But, we're encroaching on those kind of low or those, upper 70s, that bearish resistance line up above. We would post our first buy signal since March if we got to 81. So that would be a pretty significant move in my eyes. That would also move us back to a positive trend for crude on the default chart. But again, something to watch out for in terms of longer term leadership or maybe longer term weakness within the overall space. Okay. What else do you think? We had a busy week. What were you about to say something? I didn't mean to cut you off.
Go for it.
Okay. Yeah, busy week from an economic data perspective as well. David and I have kind of been droning on at least at some point about how we're not looking per se at economic data or political data internationally per se, but we are going to be.
But it does move price.
Exactly. It does move price. Talking about some of the inflation data or, rate decision, maybe rate hope decisions that came over the last week. Things I think all in all were positive. I'll say that with an asterisk, but positive so far. What do you think?
It's weird how we define positive now. Sometimes like good could be bad could be good.
Yeah,
it's all
wait
over
till
the
next
place.
week, right?
Yeah, wait till next week. That definition may change. But nonetheless, as far as what rates have been doing this week, we've generally seen them move lower, especially after Wednesday's sort of lower print on the CPI. And I think even today on PPI, Thursday, coming out, it was lower as well. So have generally seen yields fall here. That TNX chart gave its second sell signal. First time we've seen that sort of since December as well, which is
about to say, right?
So, I mean,
right.
There could be some sort of cross currents here that we're seeing, but it's also still holding on to that bullish support line, albeit barely, and I think sometimes whenever we look at the trend lines and we can think even months out, oh, that's a distance away, or maybe it won't get there at this point. But now we're there. It's been pretty interesting. We saw a negative trend reversal, or a trend move back into a positive trend for TNX back in April, but now it's sort of just sat there and waffled, and now we're back moving lower and testing this bullish support line. So it really at the moment doesn't look like per se that rates are drastically moving around, because I mean, for much of 24, they've
been a wait and see. It really has been a wait and see.
Yeah.
And, you know, we saw that humongous drop in, you know, kind of close 2023 as we were expecting. How many rate cuts do you remember?
Yeah, if I'm remembering.
And how many have we gotten?
0.
Exactly. Yeah. So, I mean, we'll see what kind of the back half of 2024 has in store. I think at this point we're pricing in, at least the market is pricing in a couple. I think the Fed is kind of translating
only
into
thinking one at this point.
So there's still a small disconnect. I don't know if it's as intense perhaps as, you know, as it was to open the year,
but even talking about that, it is interesting to remember the caveat that back in December when we saw rates fall off, you know, move pretty notably lower, that at that point many people were calling for 6 rate cuts, which just at this point in time seems way out there in left field.
Yeah,
because of possibility.
Looking back on it, but
I mean,
you know, listen, we could have another good, because they're watching the data, right? That's always what they're, you know, that's what Powell was saying yesterday, and you know, we're watching the data. Well, speaking of the data, inflation came in, you know, lower than expected. Some of the more like shelter was still pretty sticky in terms of kind of those areas that were maybe contributing to the print. So shelter is still pretty sticky in terms of, you know, that reading, but we'll see. I mean, you get another couple positive prints and maybe things turn around, but that's nothing only time can solve.
Right. And at this point, I mean, I think most of the markets may be looking at September as a possible, but I mean, you think a lot of the Fed members have even been talking November, possibly even December. So, I mean, it continues to be a wait and see game. But I mean,
you have to think they're probably also like a little bit more conservative because we've done all this work. And again, this gets outside of the Dorsey or Nasdaq Dorsey Wright speak, right? But we've done all this work at this point. They're going to be a little bit more conservative with the work that we've done. They would rather keep, at least I think, they would rather keep too high for a little too long, or at least, you know, hold where we are for a little bit too long, rather than be overzealous to cut and then ultimately be
just their biggest fear has been inflation begins to if inflation upticks more than what they're anticipating a lot of times. I mean, consistently for the past few months, it's been around 3% year over year, but they're really targeting the 2. And I think if you were to see that uptick again, and I know some international markets, you know, I think it was Bank of Canada last week and even European Bank did ultimately cut rates, but, or at least are moving toward rate cuts, but the Fed is still holding strong at this point. I mean, if anything, it's kind of one of those things that I remember when I was a kid and like either playing a sport or something like that. And like you were talking about, you've done it for this long. So you feel like you got to do it strong. Like you got to really, you know, and I think maybe that's part of the message. The Fed just feels like they've persisted with this theme, this story for so long. We'll maintain right where we're at, you know, that until you really get some type of, and it may take a couple of months of significant, you know, hey, we were lower here, lower here, lower here, lower here, and then they might change their tune. But I really don't know at this point that you get that until you start seeing some significant kind of data points really making them feel comfortable. And so far in 24, that's not happened. You know, they've sort of just been fit to sit on their hands and say, we'll wait.
We'll see. I mean, that's, you know, ultimately all we can say. Do you have any kind of closing? I guess we've been droning on at people for long enough. I'll add, we were supposed to say it at the very beginning and open with it, but we have, and Dorsey Wright has our annual symposium, conference, whatever you want to call it.
Should have been rebranded as Catapult 24.
The bullish catapult, I may add, for those of you who are jargon familiar. The bullish catapult is a good thing. But point being, that's going to be in Nashville, Tennessee, at October, mid-October. Do you have the
Correct.
exact dates on
I
you?
believe it was 15th through 17th, so 15th, 16th, 17th. And just a heads up there that the Tuesday through Thursday, a little bit of a different change date-wise.
And listen, even if you're not familiar with the Dorsey Wright methodology or anything, David, I hear, is going to be wearing a cowboy hat and cowboy boots. So if at all,
Nashville, baby.
just come for that, right? But point being, shoot us give us a call, shoot us an email. All of our information's down in the bio, and we can get you set up with that if you're interested in doing so. Anything else?
Wraps us up for this week. We've covered quite a bit and tried to do it in a short amount of time. Hopefully
Yeah.
it wasn't too rambling, but I think it flowed pretty well, all things considered.
Cool. I do too. All right, that will do it for us. I hope everyone has a good week. We will be back next week. We do have an abbreviated trading week, I think, with Juneteenth, Wednesday.
I think so, yes.
Regardless, we'll be back next Thursday or next Friday, who knows, to discuss market changes. All right, bye.